What's good, YouTube? Welcome back to my video. So today I'm going to be talking to you guys about the stock AHT, Ashford Hospitality Trust Inc. So the stock went down 8.55% during hours on Friday, and then it went down another 27.02%, so a total of about 35%. Now, in regards to the stock, why did it go down? And is it a buying opportunity, or is this a stock that you should run away from because it's a falling knife? So in regards to the company, the announcement was made that there was going to be a reverse stock split, and because there's going to be a reverse stock split, the stock went down. And the reverse stock split is a 1-to-10 reverse split. So if you don't understand what it is, let's hypothetically say the stock is trading at $3, and if you have 10 shares, you now will own 1 share at $30. So it's still technically the same dollar amount as long as the price doesn't change. You still get the same dollar value. It's just you're gonna have a lot less shares, but at a higher price. So the announcement was made on Friday, and they basically said that on July 16th, after hours, that's when the reverse stock split would happen, and it will be effective July 19th, which is a Monday, that the reverse split will take into effect onto the stock market. So the CEO went on Twitter and just basically confirmed what they were saying, and he gave reasons as to why they're doing a reverse stock split. So typically, before I get into the reasons, typically a reverse stock split is seen as a bad thing because companies are either becoming less and less valuable. So basically they have to do a reverse stock split to avoid themselves from becoming a penny stock. Either most of the times when companies are doing a reverse stock split, it's because it's badly managed or there's some sort of issue with the company, and in order for them to stay on the NASDAQ or the New York Stock Exchange or whatever exchange they're currently on, and to avoid becoming a penny stock, they have to do a reverse stock split so the stock per share could become worth a lot more even though the market cap stays the same. So here are the reasons why the CEO gave out as to why they wanted to do the reverse stock split. So some funds can't hold stocks below $5. So there's certain funds, there's certain hedge funds, there's certain companies that refuse, they have rules that they have to follow, and they refuse to buy any stocks in the OTC, or they refuse to buy certain stocks below $5. And that means that there's going to be less buyers, less institutional buyers, less buyers overall in the stock if it's below $5, which would mean that the stock won't have that positive effect. And another one is some brokers prohibit or charge higher cost to margin for sub $5 stocks. And I do work for a broker as of right now, and this is definitely true. So I'll give you guys an example. If you see a stock that are under $5 and you want to use margin, we will charge you a higher interest. Or another situation may be that you might not be able to have margin at all if it's below $5. And there's sometimes where, example, let's say you have 10,000 shares and the stock is trading above $5. What the brokers will do is they will give you up to 50% margin. So if you have 10,000 shares, you can buy up to 15,000 in total. And if you're below 5,000, then what they might do is they might restrict you to a 25% margin rate, which would mean that you would be able to get 12,500 rather than 12,500 rather than 15,000 shares. So if that's the case, less people would be buying, less people would be using margin, which means there's less buying power, which means that the stock won't be going up as much. So another reason is, the third reason he gave is in regards to options, the strike prices are at 250 increments. So as you see right here, this is the strike prices for AHT. So you see $2.50, $5, $7.50. As you can see, $10 and above, there's no liquidity. Not many people are buying. There's not much liquidity. Even $7.50, it's still there. Most people are buying $2.50 and $5 in terms of the strike prices, and people won't execute their strike prices above $5, obviously, because there's no point to it. People are only going to be executing these ones because these are the only ones that are in the money. So if you're in the money and people execute their strikes, their options, they end up purchasing more shares. And that drives the price up. So an example is I took is ACB, which is above $5 stock, so it's about $8. As you can see, the increments are typically 50 cents. So 350, 4, 450, 5, 550, etc. So as you can see, there's so much more liquidity right here than there was compared to this one right here. And not only that, these stocks all right here are going to be in the money, so people are more likely to execute their options, which would mean that they would be purchasing the shares on maturity date. So as you can see, this definitely will help out the stock in the long term, but in the short term, no one really knows what's going to happen with the reverse stock split. Typically, stocks tank after a reverse stock split. We've seen, I think, one on Thursday or Friday, or sometime this week, there was a company that did a reverse stock split and it went up. I think it was Staff. Give me 1 second. So Staff right here, it did a reverse stock split, and look what happened. After the reverse stock split, like this stock just kept going up. So as you could see, reverse stock splits aren't always a bad thing. It could be a good thing. It just depends, and no one really knows at 100% certainty what's going to happen. So I'll give you guys an example right here. They did a reverse stock split literally the same time exact last year, July 15th. They did the reverse stock split. Market opens up on July 16th. So if I go ahead and pull up a chart on TradingView and you check July 15th, where was that? Right here. Sorry, I was looking at June. So right here, July 15th, the reverse stock split happened right here on this date, and look, the stock ran up and then people started taking profits, and then ever since then the stock price just kept going down. But you have to remember, this was the time when COVID happened, when COVID was serious. I'm not saying that it is serious or isn't serious, but I'm saying people weren't traveling, there was so many restrictions, etc. So obviously a hotel company or companies that involved traveling are going to be taking a huge hit, and that could also be the reason as to why it kept tanking since the reverse split. Whereas right now the stock is about 280, and I have here support levels at 266. You could maybe even argue there was one at 233, and then I have a major one at 180, 185-ish, 182-ish. So yeah, as you could see that the stock could possibly find a support somewhere and then start reversing back up, and maybe starts going up for the reverse stock split. Also, one last thing I did want to mention about was price targets that analysts have given out for AHT. So we have 2 price targets back in May, and we have 1 target in June on June 14th. So we have a $3, $6, and a $5 price target. The average price target is $4.67. Obviously, you can ignore this because the stock has dropped much below that price target. So we are at about $2.87. So that is lower than the lowest price target we do have here for the stock. Plus, you have to also consider the fact that everything is reopening back up. So people will be booking more of their AHT hotels. Travel stocks will start going back up. But one other thing you want to consider negatively is in regards to the COVID variant. We don't know how that's going to play out and if that's going to take an effect on travel stocks or not. It just varies on what the situation will be with it. So pretty much the stock is a 50, overall the stock is a 50-50 in terms of fundamentals. So as I said, no one knows 100% what's going to happen. Trade how you want to trade, but that's pretty much the news as to why this stock has gone down. If you do have any questions, please leave it down below. Don't forget to like and subscribe, and thank you. Peace out.